Hi everyone. Before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2024, May-June, Paper 3-1 and Paper 3-3, question number 3. This is the structured paper 3, which consists of 3 questions. Each of them will be of 25 marks, and the total time limit for this paper is 1 hour and 30 minutes. So ideally, you should be spending about 30 minutes in order to solve each question. And in this video as well, we'll be attempting to solve this question number 3 under 30 minutes. Without any further delay, let's get started. The cost section and accumulated depreciation section of GPLC's schedule of non-current assets at 31st December 2022 are as follows. We have land and buildings, plant and machinery, and motor vehicles. And these are for the year 2022. The following information has been provided. Land and buildings consists of land which was acquired in 2022 and one office property. Okay, so this is for the year 2022 itself, and we have been given addition of land right here. So land has the cost of 190,000, and this 360,000 is for the office property. Okay, at 31st December 2022, the company owned 2 vehicles that were acquired on the same day. So this vehicle cost, we have a total of 135,000. This is for 2 different vehicles. Vehicle A's cost is 25% higher than vehicle B's cost. So we can just write it down in the form of an equation. It just means that the cost of A will be cost of B increased by 25%. Okay, so let us figure out the cost itself. So we know that the cost of A plus the cost of B will be equal to 135,000. And we also know that cost of A can be written down as B times 1 plus 25%, which is basically B times 1.25. So plus B will be equal to 135,000. This just means that 2.25B will be equal to 135,000. Now this gives us the cost of B to be 135,000 divided by 2.25, which results in 60,000. Then we can also get the cost for A, which is the cost of B, 60,000, times 1.25, which results in 75,000. Okay. A full year's depreciation is provided in the year of acquisition and none in the year of disposal. Then the depreciation methods used are given as well. We provide no depreciation for land. For buildings, we use a straight line method. For plant and machinery, we use a reducing balance method. And for motor vehicles, we use a straight line method. The following information is also available for the year ended 31st December 2023. First of all, let us take a look at our question. We need to prepare the cost section and the accumulated depreciation section of GPLC's schedule of non-current assets at 31st December 2023. Okay, so we need to prepare the same thing but for the year 2023. Now, on 1st January 2023, a review of the estimated useful life of the office property suggested that it should be 5 years longer than originally estimated. Okay, let's take a look above. So the first thing we need to do is figure out the previous estimated useful life so that now we get to increase it by 5 years. And we have been given the depreciation charge for the year, which is 14,400. We also know that we apply depreciation based on a straight line method. So this 14,400 should be equal to the cost of the building or the property, which is 360,000, and divided by the estimated useful life. Now, previously, the estimated useful life used to be 360,000 divided by 14,400, which results in 25 years. Okay, and now we need to increase it by additional 5 years. But before increasing that, since we would now get a different depreciation charge for a year, we need to remove the accumulated depreciation part from the cost so that the new depreciation would be in line with whatever value of the property is remaining. And for that, we first need to figure out for how many years have we used this land and building. At the end of 2022, we have the accumulated depreciation of 144,000. We know that 14,400 is the depreciation for 1 year, right? It means that 1 would be the depreciation for 1 by 14,400 year. And we need 144,000. So this will be the depreciation for 144,000 divided by 14,400, which is 10 years. So we have already used this property for 10 years, and now after 10 years we figured out that we should be increasing the estimated useful life by another 5 years, right? So from the initial 25 years, 10 years has already passed. So we need to exclude it now, because we cannot include the value that was previously used in those 10 years while calculating the depreciation for the remaining period. That would be invalid. So minus 10 years. This will give the remaining life of 15 years. And now we need to increase these remaining years by another 5 years, which is 20 years. So this is the remaining estimated useful life after we change the estimated useful life by 5 years. Let's read the remaining additional information as well. On 31st December 2023, the land was revalued at 249,000. So previously, the cost of land was 190,000 and we do not charge depreciation on it. So clearly there has been a revaluation upwards. Let's calculate it. The new value is 249,000, whereas the previous value was 190,000. So this gives us the revaluation upwards of 59,000. Okay. Now, since we also need to calculate the accumulated depreciation part, we also need to calculate the charge for the year for the buildings. So this will be the depreciation charge. We'll first calculate it for buildings. Like I previously said, we need to remove the accumulated depreciation part from the cost, because this value worth of the property has already been used and we cannot charge any more depreciation on this part because this is already depreciated. We can only charge the depreciation on the remaining value. So the first step is to calculate the remaining value, which is 360,000 minus 144,000. This will give us the new cost, and then we need to divide it by the estimated useful life, which we've already calculated to be 20 years. Alright, this will give us the depreciation charge for the year 2023 for our buildings to have the value of 10,800. Okay, that is all that we need to do for the first information. Now for the second one, an impairment review of a machine on 31st December 2023 suggested that it had a fair value of 7,500 and a value in use of 9,800. Whenever we have been given fair value and value in use, we need to calculate our recoverable amount. Recoverable amount is just going to be higher of the fair value and value in use. In this case, value in use is higher, so that will be the recoverable amount. Then the machine was purchased on 1st January 2021 at a cost of 24,000. During the year, a new machine was purchased at a cost of 35,000. And we're talking about machine on which you use depreciation using the reducing balance method. So let's just create a timeline here. This was purchased on 2021. We used it for 2022. Now we're trying to calculate its value for the year 2023. And this impairment was made at the end of the year. Okay, the cost of the machine was 24,000. Let us calculate the depreciation charge for the first year. That will just be the cost times the rate. And in this case, the rate is not given. So we need to calculate the rate using the given information above. So we have our total cost along with the accumulated depreciation, which gave us this depreciation value of 26,100, right? So let us just create an equation. 26,100 is the net book value, which is the cost of 280,000 minus the accumulated depreciation of 106,000 multiplied by the rate. So this will give us the rate of 26,100 divided by 280,000 minus 106,000, which is 0.15, or we can write it down as 15%. So that is the rate. Now 24,000 times 15% will result in the value of 3,600. For the second year, that will be 24,000 minus the accumulated depreciation of 3,600, which gives us the net book value of 20,400 times 15%. This results in the value of 3,060. And for the year 2023, that will be 24,000 minus 3,600 minus 3,060. This gives us the net book value of 17,340 multiplied by the rate of 15%. And this gives the depreciation charge for the year 2023 to be 2,601. Now the accumulated depreciation will be 3,600 plus 3,060 plus 2,601. This results in the value of 9,261. Now the net book value will just be 24,000 minus 9,261, which results in the value of 14,739. Okay. Clearly, we can see that the recoverable amount is lower than the carrying value. It means that there exists an impairment loss. Now, after there is an impairment loss, we need to replace the cost by the recoverable amount. So it is basically like revaluation. So the new cost to be included instead of 24,000 is 9,800. It just means that we need to subtract 24,000 minus 9,800 from our cost section. So we need to remove 14,200 from the cost section as part of impairment. And again, like I said before, this is similar to revaluation, which means that we also need to remove its previously accumulated depreciation of 9,261. Then during the year, a new machine was purchased at a cost of 35,000. Now we need to calculate the depreciation on our plant and machinery as well. Let's take a look above. So we have 280,000 as the cost, 132,100 as the accumulated depreciation, and we have a purchase as well. So we need to include this 35,000 as part of our cost, and we already know that the rate per annum is 15% under reducing balance method. So we start with the opening cost of 280,000. We add the purchase cost of 35,000. We then subtract the opening accumulated depreciation of 132,100 and multiply this by 15%, which will give us the depreciation charge for the year to be 27,435. That is all we can do with the second information. Now for the third one, vehicle B had been part exchanged for a new vehicle C, giving a loss on disposal of 3,000. Okay. So we do not know when vehicle A or vehicle B was purchased, but we do know that they were acquired on the same day. And we have the accumulated depreciation of 81,000, and we know that the depreciation charge for the year is 27,000. We also know that the depreciation method is a straight line method. So 27,000 is for 1 year. It means that 81,000 will be for 1 by 27,000 times 81,000 years. This is just the application of unitary method. It means that we have been using these vehicles for 3 years, and after 3 years we part exchange it. And we also know that a full year's depreciation is provided in the year of acquisition and none in the year of disposal. So we do not need to charge any depreciation on vehicle B for the year 2023. However, there was a loss on disposal, which means that we need to calculate its part exchange value. Before we do that, we need to calculate the rate of depreciation. Again, we can just multiply the cost of 135,000 by the rate in order to get the depreciation charge per year of 27,000. So 27,000 is equal to 135,000 times rate. So the rate of depreciation in this case will be 27,000 divided by 135,000, which results in 0.2, or we can write it down as 20%. Now we also know that the cost of vehicle B is 60,000 and it has been used for 3 years. So the accumulated depreciation is just going to be the cost of 60,000 times 20% times 3, because it has been used for 3 years. This results in 36,000. Now the net book value is just going to be the cost of 60,000 minus the accumulated depreciation of 36,000, which results in 24,000. Okay. Now, let's use the loss on disposal. We know that loss occurs whenever the net book value is higher than the sales proceeds, right? And in this case, we have a loss of 3,000. We calculated the net book value to be 24,000. We're trying to calculate the sales proceeds. So the sales proceeds will be 24,000 minus 3,000, which results in 21,000. Alright. Then GPLC paid the balance of 25,000 by check to acquire vehicle C. So for vehicle C, the cost is just going to be the part exchange value of 21,000 plus the check payment of 25,000. This results in the value of 46,000. Okay, now let's calculate the depreciation on vehicles as well. We no longer need to charge depreciation on vehicle B, so we only need to include the cost of vehicle A, which we calculated here to be 75,000, and the cost of vehicle C is 46,000. So 75,000 plus 46,000 multiplied by the rate of 20%. This results in the depreciation charge for the year to be 24,200. That is all with the given information. Now let's prepare the schedule of non-current assets. So we have the schedule of non-current assets, and we only need to prepare the cost section and the accumulated depreciation section. This is at the date of 31st December 2023. Okay, we have motor vehicles, we have plant and machinery, and we have land and buildings. Let's start with the cost section. We can start with the opening balance at 1st January 2023. And for this one, we can just take the cost at 31st December 2022. So that will be 550,000, 280,000, and 135,000. So 550,000, 280,000, and 135,000. Let's write down our additions or the purchases made during the year. There were no purchases for land and buildings, but a new machine was purchased at a cost of 35,000, and we purchased a new vehicle at the cost of 46,000. Let's write it down. So 35,000 for plant and machinery, 46,000 for motor vehicles. We then have disposal as well. No disposal was made for land and building. There was no disposal for plant and machinery as well. We only disposed vehicle B, and vehicle B had a cost of 60,000. We need to remove its cost now. So we have 60,000. Then we also had revaluation for land and building. We've already calculated the revaluation upwards value that we need to include within our cost, which was 59,000. So we'll include the 59,000 right here. Then we also had an impairment for machinery. And for this impairment as well, we've already calculated the value that we need to subtract from the cost, which is 14,200. That should be all for our cost section. So we now get the value at 31st December 2023. Okay, for land and building, that will be 550,000 plus 59,000, which results in 609,000. Then for plant and machinery, that will be 280,000 plus 35,000 minus 14,200, which results in 300,800. And for motor vehicles, that will be 135,000 plus 46,000 minus 60,000, which results in the value of 121,000. That is all for the cost section. Now let's move towards the accumulated depreciation section. So we first write down the accumulated depreciation at 1st January 2023. And for this one, we can just copy down the values for accumulated depreciation at 31st December 2022. That will be 144,000, 132,100, and 81,000. So 144,000, 132,100, and 81,000. And remember, in this case, there was disposal, so we need to subtract the accumulated depreciation of that disposed non-current asset. In this case, we disposed vehicle B, and for vehicle B, the accumulated depreciation was of 36,000. Let's remove it now. There was impairment as well. And for impairment as well, we need to subtract the accumulated depreciation of the impaired non-current asset. That was 9,261 for plant and machinery. Okay, after this, we can include the charge for the year. We've already calculated the depreciation charge for the years as well. That was 10,800, 27,435, and 24,200. Let's write it down. So we have 10,800, 27,435, and then 24,200. That should be all. Now we can get the accumulated depreciation at 31st December 2023. For land and buildings, that will be 144,000 plus 10,800, which results in 154,800. For plant and machinery, that will be 132,100 minus 9,261 plus 27,435, which results in 150,274. And for motor vehicles, that will be 81,000 minus 36,000 plus 24,200, which results in the value of 69,200. That should be all for the first part. Let's move towards the next one. And we have been given the working section right here. So you need to show all of these workings, whatever I have done within the insert, in that particular box so that you get your markings correctly. Now we have been given additional information. The directors have two options to acquire another machine in the coming year. Option 1 is to buy a new machine. Option 2 is to buy 2 used machines. The cost of option 1 is 17,000 higher than the cost of option 2. In the first year of use, the maximum capacity of each option is the same. The directors wish to select the option which will maximize profit. Okay, so we just need to focus on profit maximization. Now we need to advise the directors which option they should choose by justifying the answer. This is a 5 mark, so we need to have 2 comments on option 1, 2 comments on option 2, and 1 final decision. Let's start with option 1. If we're looking at profit, let us talk about depreciation. We know that the cost of option 1 is 17,000 higher. It means that the depreciation charge for option 1 will definitely be higher, which will reduce the profit. Let's write it down. Depreciation expense is higher. Then the second thing that we can note down is that since we are buying a new machine, it might have a longer useful life as compared to the used machines. Let's write it down. It might have a longer useful life as compared to the used machines. That is all for option 1. Let's move towards option 2. The first thing we can write down is, since we are talking about used machines, maintenance costs might be higher. That will definitely reduce our profit. So maintenance costs may be higher. Then the second thing that we can write down is, again, we're talking about used machines, so there is a higher chance of breaking down, and if it breaks down, then the production will get affected, which will finally impact on sales as well. So we will lose sales. Let's write it down. More chance of breaking down and losing sales. Now, based on these factors, we need to make a final decision. So personally, I would advise the directors to choose option 1 because used machines are less efficient. Let's write it down. The directors should choose option 1 as used machines are less efficient. Alright, that is all for this part as well as this entire question. If you found this video useful, make sure that you like the video and leave a comment below, and make sure you're subscribed to this channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.